As Americans think inflation will be a problem for years to come, let's take a look at what happened in the economy this week. Before we begin, remember to like this video and subscribe for more economic updates. On Monday, the New York Federal Reserve released the results of its survey of consumer expectations for April. Last month, consumers said they expect inflation to be at 3.3% a year from now, up 0.3 of a percentage point from their March projection. Consumers also said they expect inflation to be at 2.8% 5 years from now, which is 0.2 of a point higher than what they said in March. The 3-year projection did drop slightly to 2.8% from 2.9% in March. But it's worth noting that in none of these projections is there any expectation that the Federal Reserve will be successful in returning inflation to the 2% level within the next half-decade. This week also saw the release of key inflation numbers for April. And it turns out that data may serve to validate the concerns expressed by consumers in the New York Fed's survey. On Tuesday, the Labor Department revealed that the April Producer Price Index, which gauges inflation at the wholesale level, rose more than expected on a monthly basis. Headline, or all items PPI, increased a 0.5 percentage point month over month, faster than the 0.3 of a point rise forecast by Dow Jones. Core PPI, which excludes food and energy prices, also rose 0.5 point month over month, considerably faster than the 0.2 increase projected. On an annual basis, PPI increased 2.2%, which was in line with estimates. As for annual core PPI, that increased 2.4% year over year, same as March, and 0.1 of a point faster than expected. The following day, Wednesday, the Labor Department was back to inform us of the uninspiring news that inflation remains a problem at the consumer level as well. There was a bit of good news in the monthly headline Consumer Price Index, which increased 0.3 of a point in April rather than the 0.4 of a point that had been projected. However, annual CPI landed at 3.4%, which was in line with economists' expectations. Monthly core CPI came in as projected, rising 0.3 of a point, while annual core CPI rose 3.6% in April, also in line with the consensus estimate. Although it's worth noting that the year-over-year core CPI rose at its slowest rate in 3 years last month, the metric remains well above the Federal Reserve's target rate of 2%. In keeping with the theme of the hour, the National Federation of Independent Business reported this week that inflation remains a prominent concern of America's small business owners. According to results reported on Tuesday, the Federation's Small Business Optimism Index did manage to rise 1.2 points in April to 89.7, instead of declining by 0.5 point to 88 as projected. Nevertheless, the index landed below its long-term average of 98 for the 28th consecutive month, and once again the survey revealed that inflation remains the single biggest problem facing business owners, with 22% of respondents identifying it as such. Finally this week, a key sign emerged suggesting that consumers' knees are starting to buckle under the pressure of persistently higher inflation and equally persistent higher interest rates. On Thursday, the Census Bureau reported that retail sales in April were unchanged from a downwardly revised 0.6 of a point increase in March. Economists had projected an increase in sales last month by 0.4 of a point. Year-over-year sales were up 3% in April, but it's important to note that the data is not adjusted for inflation, which landed at 3.4% on an annual basis last month. The data speaks for itself. Make sure to join us again next week. This is Devlyn Steele for Augusta Precious Metals, signing out.